to this morning's webinar, which we're going to be looking at an overview of the new domestic reverse charge for the building and constructing sector. My name's Simon Buchan. I head up the VAT department at BHP, and I will be going through the VAT bits. And one of our tax partners, Zoe Roberts, will be looking at the CIS bits for you. If you've got any questions, then please sort of stick them in the chat boxes or raise your hand or whatever you do with Zoom.
We've got a Q&A, Simon, so I should be watching that throughout as well. So if people want to pop your questions in there, if it's appropriate, I'll interrupt you, Simon, and answer them. If not, we'll have time at the end.
Okay, and sort of, you know, and we've had an interesting start to the morning so far, in so much that internally we've got our links wrong, and we were signed up to an export seminar on Brexit that we were doing later, and then as I was cleaning my glasses to make sure I can read the screen, the lens fell out, so I've had to scurry around and get my spare pair. So stress levels are quite high, but bearing that in mind, we'll kick on. So this is the agenda. What we're going to talk about today. There's a bit of a background. Zoe will go through the construction, CIS, the basics bits, and then I will go through the rest. Some space for questions and at the end, but I say, if you want to ask them as we go along, please feel free to do so. So, why have we got the domestic reverse charge for the building and construction industry? Well, essentially, it's a counter-fraud measure. The building industry is huge. In the UK, it's worth £120 billion a year. And Hmrc consider that there's about £100 million worth of VAT fraud in the sector. And this is part and parcel of Hmrc's measures to try and collect or reduce that level of irrecoverable VAT. The reverse charge applies to services which fall within the construction industry scheme, CIS. And then, of course, it will only apply from the VAT sense to individuals or businesses that are registered for VAT in the UK, or indeed should be registered for VAT in the UK for that matter. It came in with effect from the 1st of March 2021, so it's been in now for what, 15, 16 days, something like that. But it was previously due to be brought in a couple of years ago, and for various reasons, lack of knowledge in the sector, Brexit, COVID, various other reasons, it was delayed until 1st of March this year. Why it hasn't been delayed further, given some of the reasons it was delayed in the first place, we don't know, but it had to come in some time, I suppose. And this is what it's all about, really. The way VAT works, the supplier charges VAT on the supplies, the customer recovers that VAT and then charges it onto their own customer. And so essentially what Hmrc are trying to do is sort of combat this scenario where Company A supplies services and charges VAT to Company B. Company B recovers the VAT on its VAT return, perhaps. Company B then charges for its services at a markup, of course, to Company C, but then decides to run off without declaring the VAT. So somewhere along the line, Company C has got some VAT recovery from Hmrc, which Company B hasn't paid over. That's the issue Hmrc are trying to combat. And apparently it's big enough for them to introduce this major change to the VAT accounting. And so on that note, I'll hand over to Zoe for the CIS bits.
We thought it'd be useful just to go through the basics as a reminder of the construction industry scheme, which I'm sure anyone listening to this is probably well aware of, but just as a sort of a reminder of what it is and what the CIS is meant to achieve in general. So CIS itself has been around for many years in various different guises, and the revenue keep trying to change it, make it a little bit more effective. And effectively, it's designed to stop income tax, corporation tax fraud within the CIS, within the construction sector. And broadly, the system is there to collect the profit, the tax on the profits. and it operates because contractors have to withhold tax from payments that they make to subcontractors made with regard to construction operations. So just in terms of trying to define what a contractor is, go back a bit, Simon.
Right, got too excited there. Gone the wrong way. Told you it's stressful.
So in terms of what is a contractor effectively anyone in the construction sector who's paying a subcontractor for construction work. So it could be property developers, house builders, those who are trying to build properties in order to sell. It could be gang leaders or businesses who supply and organise labour. Again, they're within CIS, they're a contractor. Could be foreign businesses, so it's not just limited to UK businesses. If you're carrying out construction operations in the UK, you're in CIS. If you're a householder, you're not in CIS. If you're a property investor or an occupier, so if it's a property that you use for your own purpose, any work that you have done on that property, if you have an extension built, you're not in CIS. However, there is a caveat to that, where if you're a deemed contractor, you are in CIS. There has been a bit of a change coming in on the 6th of April to do with deemed contractors. Typically, a deemed contractor is a very large business or organisation that's having a significant spend on construction operations, so typically NHS, local authorities, that sort of size of business. The definition up until the 6th of April is if your spend on construction services is over £1 million on average over 3 years, so it's sort of looking back over a 3-year period. That's been changed from the 6th of April onwards. So you now have to have a spend over £3 million in a previous 12-month period, which positive change, I suppose, for some, because it's sort of raised the bar in terms of what a large spend looks like. But it does mean anybody who's in those rules now has to look at their spend on a 12-month rolling basis rather than just on an annual basis. So it's something to watch out for. So in terms of what contractors have to do, you've got to register with the revenue before you pay your subcontractors. You've got to check the subcontractor's payment status and then deduct the right amount of tax. You've got to have the administration, so effectively a bit like a payroll, give monthly payment slips to your subcontractors, submit your monthly returns, and of course pay the tax over. And just to note, businesses can be both contractors and subcontractors. So move on to the next slide, Simon. What is a subcontractor? So effectively, a subcontractor is anyone who's agreed to carry out the construction operations for a contractor. So it could be carrying out yourself, or it could be something that you subcontract on. If you're that sort of middleman in the chain, then you're a subcontractor. Can be agencies and gangs. So if you're supplying workers, if you're sorting out the labour, then again, you'll be a subcontractor, and you'll be within CIS. Now, the contractor at the moment doesn't need to be necessarily concerned with the transactions lower down their supply chain. So, for example, between the gang leader and the other members of the gang. That's possibly likely to change, I think, over the next year or couple of years. There was a consultation document last year which raised the question as to what supply chain due diligence a contractor should carry out. And whilst there's been no firm changes or indication of what changes might come in as yet, it's highly likely that there will be some supply chain due diligence and sort of pushing that responsibility back up the chain to encourage compliance down the chain. So as a subcontractor, what do you need to do? You can choose to register with the revenue. If you do, then you have less tax withheld than you would otherwise. And if you have a good record of tax compliance, then you can receive your payments without any deduction of tax at all. You have to give your contractor certain information so you can be checked. And you've obviously got to keep all your records and payment slips as well. In terms of what payment CIS applies to, it's anything that's paid from the contractor to the subcontractor, which is under relation for construction operations. And it's sort of not relevant how it's paid, whether it's in cash, check, or whether it's sort of advances. The payment timing is less relevant. It's the amount that needs to be paid. You can deduct anything that's for the cost of materials. So we're just trying to get to the deduction on the service element of it. But again, there's a change coming into that from the 6th of April. So it's only the cost of materials that you as a subcontractor directly incur that can be deducted. So that's, again, a change that's coming in. So very quickly on to the next slide. Just a bit of an overview of what are construction operations, because it's quite a wide definition. And it's very useful sort of CIS 340 booklet, which is the revenues publication. There's a link to it there, which has sort of things that are included and things that are excluded, and it's quite a long list for both, and quite nuanced in terms of which is on which list, but it's generally work that's being done to a building, so it's site preparations, it's alteration, dismantling, construction, some types of repairs, decorating and demolition. It's not the ancillary services that are connected to a construction site but aren't actually construction services themselves. It doesn't cover things like architects and design costs. And if you have a mixed supply, then that's all treated as if it's construction, even if it's a very small element that's the actual construction. So again, it's quite a complicated system, and something to be well aware of how to apply. I think that's everything I was going to cover. So on to Simon.
Okay, thank you, Zoe. So what we're going to go through in the next few slides is really to see how the domestic reverse charge works. What do you need to do to make it work? Looking at reviewing your accounting systems. There will be a cash flow impact, and so you may want to look at moving from quarterly VAT returns to monthly VAT returns in some cases. Staff will need to be aware of the change, so that when they're looking at contracts and work that you've got on hand, that they can identify work that falls within the reverse charge and work that will remain in normal VAT accounting rules. And basically, asking yourself, are your customers and or suppliers aware of the change? Many businesses are sort of writing letters to the customers and the suppliers in connection with the reverse charge, perhaps informing them whether they are an end user or asking whether they're an end user, which is a key definition within the whole process, and we'll look at that later. And so there's plenty of things to do, and we're learning as we go along. As Zoe said, there's some from the CIS side, there is some nuances, and that sort of overflows into the VAT side as well. So the basic principles of this is that, and this is the major change, is that, as the slide earlier just showed you that normal VAT accounting is that the supplier raises an invoice, charges VAT at the appropriate rate, and a customer receives it, and then the same thing then goes on up and down the chain. And what the reverse charge is going to do is going to try and take out the risk from Hmrc's point of view that someone will run off without paying the VAT that they've charged, and therefore the requirement for accounting for output VAT on a service is going to pass, and it's going to pass from the supplier to the customer. It's a major change, and the customer, having received the service, will pay this the VAT to Hmrc via this reverse charge mechanism. So what they will receive an invoice from their supplier, which might say construction services £1,000. No VAT will be charged. But then the receiver of the invoice, the customer, under the reverse charge, will work out what the VAT that should have been charged was. So in £1,000, if it's a 20% tax rate, the VAT should be £200. They will then account for £200 in box 1 as if it's output VAT, and then they'll recover it in box 4 according to their VAT recovery position. So in most cases, the reverse charge is going to work out as a net VAT adjustment. So if we go back to our £1,000 example, if that was the only transaction on the VAT return in that period, you'd have a purchase in box 7 for £1,000. You'd have £200 in box 1. You'd have £200 in box 4, and no VAT to pay. So that's the impact of the reverse charge on the VAT accounting, as opposed to normal VAT accounting, supplier raises an invoice for £1,000, charges VAT, and the recipient of it recovers it under the normal rules. So that's what the change is, and I've got a couple of slides towards the end which sort of will illustrate that for you. It applies to building and construction services within the CIS, but which would be standard rated or zero rated. We no need to worry about supplies which would be zero rated. So basically, zero rated supplies for VAT purposes are supplies in the construction of new dwellings. The supplies have to be reported under CIS. If they're not reportable under CIS, then normal VAT rules apply. The difference, just going back to what Zoe was saying about CIS, the sort of contractors in CIS sort of deduct amounts depending to the status of the subcontractor from the invoice provided. The reverse charge doesn't apply to the sort of payments net of CIS deductions. It applies to the total value of the invoice. And also, if it's a supply and fit element, or the contractor in the course of providing his services are providing materials as well, there's no deduction for the materials elements. It's the whole value of the invoice, service and materials, which count. We have some exclusions to reverse charge, and there's two key definitions here. Are you an end user or are you an intermediary? We'll talk about them later. But supplies of construction services within CIS to end users or intermediaries, the reverse charge doesn't apply. Normal VAT rules will remain. So Zoe went through some of the services that fall within CIS. This is them expanded here. But actually, even then, this is only giving you a flavour of what what will fall within the domestic reverse charge and what won't. There is a guide, the CIS 3140, I think it's called. There was a reference to it at the end of Zoe's slides. But in the back of that, there's an appendix, Appendix C, and that will sort of go into the detail as to what's included and what's excluded within the reverse charge. And even then, when I've looked at it for certain questions clients have asked me, I've found there's some doubt. And the general rule coming out of Hmrc appears to be that if in doubt, apply the reverse charge. So, first of all, Hmrc have said clearly they want us to get it right straight away, but they are going to allow what they call a soft landing for the first 6 months. So if you've charged reverse charge VAT when you shouldn't, or you haven't charged it when you should have done, then providing you're trying to get it right, there should be no penalties from Hmrc for errors in the first 6 months or so. After that, who knows what Hmrc's attitude is going to be. One of the things which is the reverse charge is going to do is greatly sort of change the cash flow of businesses who are affected by it. Clearly, you're no longer charging VAT on your services, and and assuming that you're operating at a profit, then normally you would be paying VAT to Hmrc on your VAT returns. Now, of course, if you've been providing services within the reverse charge, you're not charging VAT to Hmrc on your returns. Then, depending on the mix of your business, whether you're all reverse charge work or partly reverse charge and partly normal VAT accounting, it may well be that you're moving from a position where you pay Hmrc when you submit your returns quarterly to be in a position where you'd be in a refund position. And therefore, if that's the case, you've got the option of going on monthly VAT returns so that you can recover VAT in a more timely manner rather than waiting 3 months. And that would be assistance to your cash flow. Again, it's just something you've got to look at your own position and see where you are, and then take steps accordingly. If there's services with reverse charge and non-reverse charge elements, then reverse charge will basically apply to the whole invoice unless the reverse charge element is a really minor part of the invoice. So if the reverse charge element is less than 5% of the total invoice, normal VAT accounting will apply. But if it's more than 5% of the value of the whole invoice, then reverse charge will apply to the whole invoice. So there's no need to split the invoice down between reverse charge elements and apply the reverse charge to them, and non-reverse charge elements and apply standard rated VAT to that, or reduced rated VAT, whatever's applicable. Many businesses in the construction industry are on the cash accounting scheme. The reverse charge just doesn't apply to or the cash accounting scheme doesn't apply to reverse charge anymore. And this, of course, is because you're not actually charging VAT. So if, again, added layer of complexity from your VAT reporting, if you are a business which has supplies which are partly within the scope of reverse charge and other supplies which aren't, you can continue to use cash accounting for your supplies under normal VAT rules, but the cash accounting won't apply to your supplies under domestic reverse charge. And the reason for that simply is, of course, is that if you are a supplier in the sector and the reverse charge applies to your supplies, you're not charging VAT on your invoices. And therefore, the whole point of the cash accounting scheme is to allow you to account for VAT when you're paid rather than raise your invoice. So the fact that you're no longer charging VAT on sort of CIS supplies means that the cash accounting scheme just is no longer applicable, but it's still available to you for your supplies under normal VAT rules. And so this might lead to a situation whereby you are a business who's, prior to the introduction of the reverse charge, you are a business which couldn't use the cash accounting scheme because your turnover was too high. By taking the reverse charge supplies out of your turnover for calculating cash accounting, the supplies for your other services might have fallen within the cash accounting levels, and it may be available to you. So that might be an advantage. The threshold for going onto the cash accounting scheme is if you're not on it already, you must have an expectation that your taxable turnover, so standard and reduced rate turnover, is less than 1.35 million, or is expected to be less than 1.35 million in the next 12 months. And if you're on the scheme, you can stay on it until your turnover exceeds 1.6 million. So, there may be a benefit there. For smaller businesses who are on the flat rate scheme, again, the domestic reverse charge falls out of the flat rate scheme. So again, it's a question of just weighing up whether, so if you're a business within the flat rate scheme, it falls outside the flat rate scheme. The business in the flat rate scheme would treat any sort of purchase of services or supplies of services they make under DRS, under the reverse charge. They would treat it under the reverse charge scheme like everybody else. But if they've got work outside of the reverse charge under normal VAT rules, they can continue to use the flat rate scheme for that. Again, what they'll just need to do is weigh up whether the flat rate scheme is worth continuing with. It will depend on the mix of the work that falls within reverse charge and that which doesn't. I think in most cases, any contractor or builder company who's on the flat rate scheme and has services within domestic reverse charge will probably find the flat rate scheme is no longer worthwhile continuing on. Retention payments, the reverse charge applies to them in the same way as the main contract, as and when they fall due. You might have some projects which are mixed rate. They might be partly standard rated, partly reduced rated, partly standard rated and zero rated. And what you have to do there is just basically have separate lines on your invoice for each rate. So you have to identify the value of the standard rated service, the value of the reduced rated service, and then apply the domestic reverse charge to each as appropriate. And then, of course, there's risk for suppliers and customers. The main risk is that, and we'll get onto it a bit later, is determining whether, well, I suppose, well, three risks really, is whoever you're dealing with VAT registered? Is anyone you're dealing with within CIS? You know, no doubt there are people who should be registered for CIS who aren't. And also determining whether your customer in particular is regarded as an end user, because that then determines whether the reverse charge is applicable or normal VAT accounting is not. And of course, then the other risk, of course, is just correctly identifying the type of service you're providing. Does it fall within CIS or does it not? So these are the questions that you need to ask yourself. I think it's relatively straightforward, but we can go through it. Are your supplies within the scope of CIS? If the answer is no, then normal VAT rules apply. We charge VAT at standard, reduced, zero rate, whatever. If the answer is yes, we go on to the next one. Is the supply standard or reduced rated? If the answer is no, then we go to normal VAT rules. Is your customer VAT registered? If the answer is no, then you charge VAT in the normal way. Customer, of course, then, will just suffer a VAT charge which he can't recover. So that's sort of where you sort of potentially bringing in supplies to, well, clearly non-VAT registered businesses, but also private individuals as well. Will your payment be reported under CIS? Well, if the answer is no, then normal VAT rules apply. I think there's a bit of an anomaly here in the scheme, in so much that there will be people that aren't registered for CIS and therefore won't report under CIS. And, what Hmrc, I've not seen anything which says what happens if you're dealing with someone who's not registered under CIS but should be, whether the services you supply to them would just default to normal VAT rules, or whether you would apply the reverse charge anyway on the basis that they should be registered and therefore the reverse charge should be being applied. Final question, has your customer confirmed they are an end user? If the answer is no, then the domestic reverse charge applies. If the answer is yes, then you would charge VAT at the appropriate rate. So this here is a nub of a question, and because there will be people who are end users who just don't tell their suppliers they are an end user. And if that's the case, then I say the reverse charge applies. If you tell someone you're an end user and you're not an end user, then normal VAT rules apply. And what this then sort of impacts is who can recover VAT and whether the VAT's recoverable where the VAT has been incorrectly charged. So if you know your customer's an end user but they just haven't confirmed it to you, then if you charge VAT to them in the normal way, you will be incorrect, and Hmrc will sort of be seeking to make assessments to you for the VAT that you've charged in error, in the event that you were outside of the 6-month soft landing period. Equally, the customer that receives the VAT charge, even if they're an end user and if they're an end user but they just haven't informed the supplier, won't be able to recover the VAT that's been charged. So, there's an issue here that if all that's happened is that the customer hasn't told the supplier they're an end user, but in reality the sort of supplier has guessed rightly, I suppose, that the customer is an end user. The Hmrc, I think they'll probably use their powers of judgment to decide whether just to apply the rules strictly, or whether to take a broader, more relaxed view and allow what's gone on, but sort of make sure that people get it right going forward. We'll just need to wait and see what Hmrc's attitude to all of this is. So moving on, this slide here is just looking at the transitional rules. And so basically, if we've got an invoice raised before 1st of March 2021 for supplies which may have started prior to the 1st of March, but will finish, either finish before 1st of March or started before 1st of March, but then will continue after 1st of March, providing the invoice is raised before 1st of March 21 and payment is due before the 31st of May, VAT will be charged in the normal way. However, if the invoice was raised before 1st of March 2021 and is due for payment after 1st of June, then it will be subject to the reverse charge. And clearly, if the invoice is raised on or after the 1st of March, then the domestic reverse charge will apply to all of those. So this is all sort of based around the VAT tax point rules. Essentially, in the construction industry, that is the date of the invoice or the date of receipt of payment, depending on which comes first. But then after the 1st of March, everything that falls within reverse charge will be billed under the reverse charge rules. I've mentioned several times this morning the importance of end users and intermediary suppliers. Or end users are the consumers of the final customers. They're the consumer of the services. So, in other words, they're receiving a construction service which they're not selling on. So that could be, I don't know, say someone like a retailer. They're having a new shop built. They let out a contract to a main contractor. The main contractor is supplying construction services to the retailer. The retailer is going to occupy the building for the purpose of its retail business. It is an end user. So the supply by the main contractor to the retailer would be subject to standard rate VAT in the normal way. But then the main contractor would then subcontract the work down the chain to other contractors. The subcontractors working to the main contractor would be providing services within the reverse charge, within CIS, and then the reverse charge would apply to them. Intermediary suppliers are sort of linked to end user. These are where you have businesses which might have a shared interest in the land, or same as the same corporate group. So you might have going back to the retailer, for example, the retailer might have an associated construction company that does all its building work. And so the retailer lets the building contract to its associated construction company, and then that associated construction company lets to a main contractor, and then the main contractor lets further down the chain to subcontractors. So in this situation, because the retailer and the associated construction company are connected to each other, both the retailer is the end user, the associated construction company is regarded as an intermediary, or relevant an intermediary supplier. Essentially, it's regarded as an end user. They're both regarded as end users, and so the main contractor, when supplying its services to the associated construction company, will charge standard rated VAT in the same way, as it would if it was supplied direct to the end user retailer. So that's very important that we understand who your customer is, so that you get the VAT charge right. Going back to this slide here, Hmrc require end users to identify themselves in writing. So that could be an email, it could be a letter, I suppose it could be a text, Facebook message or something like that, in really extreme circumstances. But also it can be in a contract, you know, more often or quite often there'll be a contract between the parties. And if there's a clause in the contract which says that the customer confirms that they are an end user for the purpose of this contract, then you know that will be fine. But either way, there is a requirement for the end user to confirm that they are in writing that they are the case, and then that is the case, and then the supplier knows which way to on what basis they're charging VAT on this on their services to their customer. So I went through this a little bit earlier, but this is the VAT accounting process. So VAT and sales, under the domestic reverse charge, we have no output VAT in box 1, but the value of the invoice for the services provided goes into box 6 as normal. That's if you're the supplier. If you're the purchaser, then you include reverse charge VAT in box 1. You don't put anything into box 6 of your VAT return, because that's gone on to that's on your supplier's VAT return. In box 4, you recover the VAT that you've declared on the reverse charge, subject to the normal VAT rules. So this will depend on whether you're partially exempt and all of that. But the logic is that if you're within reverse charge, you must be supplying the services on. So you'll be supplying them on with charging VAT in most cases, and you would include the value of the purchase in box 7 as normal. Says here, box 1 and 4, the entries are made simultaneously on the same return, so it's an in and an out. And so, you know, you again reiterate this point. You may wish to consider whether you want to come off quarterly VAT returns and to go on to monthly VAT returns to manage your cash flow. So this is what it looks like, really. This is the reverse charge construction before DRC. There's a small chain here. So at the bottom, we've got a subcontractor. Prior to DRC, they would charge VAT. They'd have the supply from subcontractor to subcontractor, 5,000 plus VAT, £6,000. Subcontractor to main contractor, 50,000 plus VAT. And then main contractor to end user, 250 plus VAT there. And then the payment flows would be end user would pay 300,000 to the main contractor 60 to the subcontractor, and subcontractor 6,000 to the subcontractor. And you know, you can imagine if what happens here, for example, you know, what would happen if the subcontractor went missing. This is where we're at after DRC. So we'd have £5,000. But the £1,000 VAT element isn't charged on the invoice to the subcontractor. The subcontractor would deal with the £1,000 under the reverse charge. Subcontractor invoice to the main contractor. Again, that'd be £50,000 without VAT. The main contractor would be accounting for £10,000 on the VAT that should have been charged normally by the subcontractor. But then the main contractor will charge VAT again as normal to the end user. And again, the payment flows are, again, the end user's paying 300,000 to the main contractor, i.e. the VAT inclusive sum. But the main contractor is only paying 50,000 to the subcontractor. That's because, of course, the main contractor is not having to pay the VAT element to the subcontractor. And the subcontractor has to pay 5,000 to the subcontractor again, because the subcontractor is accounting for the £1,000 VAT that would normally be charged by the subcontractor under the reverse charge again. And so this is what the VAT returns look like after all of that. So on the left-hand side, we've got the VAT returns prior to reverse charge. So the subcontractor, if we remember, is raising a sales invoice of £5,000 plus £1,000 VAT. So assuming he has no input VAT, then he would just pay £1,000. The subcontractor is raising an invoice for £50,000 plus 10,000 VAT to the main contractor. And then, of course, he's received the invoice of £5,000 plus £1,000 VAT from his subcontractor. Sorry, I missed box 7 off here due to space constraints, but clearly there should be, against the subcontractor in box 7, there should be an entry of £5,000. But on the VAT return, there's output VAT to account for of 10, input VAT to knock off of 1,000 and pay 9,000. And so this is what, if the subcontractor was a bit naughty and decided to run off without paying the £9,000 over, this is what Hmrc are trying to combat, because then the invoice from the subcontractor to the main contractor would be for 50,000 plus VAT, which would give them the 10,000 input VAT recovery in box 4, which the main contractor would be recovering. But of course, the subcontractor, because he's run off, wouldn't be paying it. So that's what we're trying to sort of combat. So again, but the main contractor's VAT return is invoiced to the end user, 250,000 plus 50,000 VAT, and then he receives an invoice for 50,000 plus VAT from the subcontractor, and he would pay over 40,000. The end user, of course, would end up with an invoice with £50,000 worth of VAT, which they would recover according to their own VAT position. After DRC, it looks like this. The subcontractor, he just raises an invoice for £5,000 with no VAT. So on the assumption he's got no input VAT to recover, then his VAT return is basically nil as far as VAT is returned, as far as VAT is concerned, and then he has an entry of £5,000 in his sales box. The subcontractor, again, he raises an invoice for £50,000, but he's not charging VAT on it. That's reverse chargeable. We've got the reverse charge entries in boxes 1 and 4 from the subcontractor. Again, it nets off the payment in box 5 is nil. Again, we haven't shown any separate input VAT here, but if the subcontractor presumably will incur some input VAT on his overhead costs and materials and whatever. And so there will be some input VAT for him to recover. And therefore, in this example, it will put him into a repayment situation. And that's why he's got to consider going on monthly returns rather than quarterlies. And then the same thing happens there with the main contractor. So there's a change to the invoicing requirements as a result of reverse charge. Basically, we've still got to raise, the supplier has still got to raise a tax invoice with all the normal information required on a VAT invoice. So who the supplier is, tax point, VAT registration numbers, all that sort of, who the customer is, address, all that sort of stuff. The one thing that's missing is that VAT is not charged in the sort of VAT box on the invoice. But you don't just ignore VAT on the invoice. You have to include a legend on the invoice to tell your customer that this is a reverse charge service. And Hmrc sort of provided some examples of acceptable wording, which I put on the bottom of the slide here. Reverse charge, VAT Act 94, Section 55 applies. Reverse charge, Section 55A, VAT Act 94 applies. Reverse charge, customer to pay the VAT to Hmrc. Something one of those three would be acceptable. But the other change is that although you're not showing VAT as a charge on the invoice, you've still got to, the supplier has still got to tell the customer that the supply is VATable, and they've got to say what rate it is. So somewhere around the part where you've got your sort of wording to bring the reverse charge to the attention of the customer. So you might say reverse charge customer to pay the VAT to Hmrc. Also on there, you've got to put a note to give the customer a clue as to what the rate of VAT charged that they have to account for under the reverse charge is. So you have to put a further comment, which is reverse charge at standard rate or reduced rate, of whatever it might be. If you've got an invoice which has got services partly at the standard rate and partly at the reduced rate, then the identification of the rate of VAT will have to be, you'll have to identify that there's both rates available. And at that point, then it might well be advisable to say, to give a value of the services which are subject to VAT at the standard rate, or those which are subject to VAT at the reduced rate, without actually showing an actual VAT charge on the invoice. I mean, the key thing to remember here is that although it's the customer who's accounting for the VAT on the transaction under the reverse charge, it is the supplier who is determining the rate of VAT that must be accounted for under the reverse charge. And if there is a disagreement between the two parties, then that needs sorting out, and the supplier's invoice needs adjusting once agreement's been made. So we're coming to the end now. Where do we go from here? I mean, essentially, you need to look carefully at the supplies that you're making going forward to your customers, and supplies that you're going to receive from your suppliers, to establish whether they fall within the reverse charge or not, or whether normal VAT rules will apply. Again, it's the supplier of the service who's responsible for determining the VAT liability. And so, you know, they've got to tell their customers what the supply is, so the customer can make the reverse charge at the appropriate rate. Subcontractors must get confirmation from the customers in writing whether they are an end user or an intermediary supplier. If you don't get confirmation in writing, even though you think they are, then you should apply the reverse charge. Got to have a look at your accounting systems to make sure that you can account with the VAT accounting changes that the reverse charge has introduced. Most, let's be right, most major systems, Xero, QuickBooks, Sage, and what have you, have introduced codes which will deal with the appropriate accounting entries for you, providing you you identify the reverse charge service and code it correctly. So that shouldn't be too much of an issue. Look at your invoices, make sure that for your services which fall within reverse charge, that I forgot what I was going to say here. Oh yeah, that you just adapt your invoice template appropriately, and that you have the relevant message bringing the reverse charge to the attention of the customer. Have a look at your cash flow. How's it going to impact on your cash flow? Do you still want to remain on quarterly returns? Would monthly returns be beneficial? Have a look, see whether, again, the change might sort of allow you to go on the cash accounting scheme if you weren't allowed to go on that previously. Whether any subcontractors who are on the flat rate scheme, whether the flat rate scheme is still appropriate. And then just one final thing is that if a service should fall within the reverse charge, but the subcontractor charges VAT in the old way, if you like, without and the customer cannot reclaim the VAT that's been charged because that VAT should not be charged. So if there's a service that falls within reverse charge, VAT shouldn't be charged. If VAT has been charged by me in error or by mistake, ignorance, what have you, then that VAT isn't VAT. It's just an amount which has been charged as VAT, and the recipient of the supply really can't recover it. So in those circumstances, the customer should be going back to the supplier and saying, no, I'm not an end user. This is a reverse charge service. Reissue your invoice with the relevant, complying with the reverse charge rules. If you do charge, if the customer does try to recover the VAT or does recover the VAT, and HMR discover this, then the chances are is that Hmrc will just disallow your input VAT claim, because what they will, going back to the whole point of this scheme, is to combat fraud in the supply chain in the construction sector. And so Hmrc will just take the view, well, look, this should have been a reverse charge. This should have been a reverse charge service. VAT shouldn't have been charged. I'm going to disallow the claim for the VAT that has been charged in error, because I don't know that the supplier has actually accounted for the VAT on their invoice. I don't know whether they're compliant or not. So this is not a case whereby Hmrc will cut you a bit of slack. I mean, they might do for the first 6 months or so. But ultimately, I think they're going to be hard-nosed here and say, right, if that's been charged when it shouldn't have been, you're not entitled to recover it. Even if we know actually that the supplier has accounted for it, you'll have to go back and get credit notes to adjust everything. So that is the end of my whistle-stop tour through reverse charge accounting. We've got 5 minutes to go, and I see we've got a few questions.
We have got a few questions, yeah. Me and Mel have been looking at them, so I'll try and bunch them together a little bit. There's one from Dawn, actually, which I think is quite relevant to your last point, which her question is, if a subcontractor is VAT registered and CIS registered, i.e. gross, how should we treat the VAT on their invoice or applications if they tell us their work is exempt?
Exempt from CIS?
I think that's and that's sort of perhaps the question is, if it's exempt, if it's or gross status for CIS, does that have any relevance to the VAT position?
No, it doesn't. So essentially, the question to ask ourselves is the service we're providing a construction service within CIS? Yes or no? If the answer is yes, but the subcontractor has gross status, then it's still a reverse charge service for VAT purposes.
And the consequences of getting it wrong is that you may not be able to recover that VAT.
The consequences of getting it wrong is that if the subcontractor charges VAT to their customer, then the customer, well, essentially that's just been charged in error. So the customer's not entitled to recover the VAT. So really, what they should just do is go back to the subcontractor, the supplier, and say, you shouldn't have charged us VAT. Can you give us an invoice under the reverse charge?
Okay. We've got a comment rather than a question from Mark Story, who's actually one of our BHP colleagues, and he just wanted to point out that if anybody has cash flow issues as a result of the reverse charge impacting, there are some specialist funders out there who can support the construction and CIS businesses. So it's, if you had a look at cash flow, so have a look at the VAT ways that you can deal with it in terms of different schemes, but also Mark Story might be able to help as well. We've got a question on what is construction operations in particular from Alison. So she said, we supply industrial roller shutter doors. Do we fall within the exclusion list of installing seating, blinds or shutters? I think there is an exclusion for those sort of items, but there also is specifically included installation of glazing doors, rolling grills and security shutters. So my gut feel would be that that would be within CIS.
Yes, it sounds like it. I don't know. I'd have to go and have a look at the detailed rules and lie down in a dark room and think about it for a while.
I think this is where
we could come back to Alison on that one.
This is where there's the nuances, because there is some crossover between sort of what's included and what's excluded in those lists C that's in the CIS guide.
Yeah.
So there's a couple of questions to do with from the accounting and Sage 50. I've got Mel on. I don't know whether she wants to input on today's or not, but so specifically we run, it's from Sharon, we run Sage 50 accounts and have set up VAT codes T21 for 20% VAT. Where will this be applied on the VAT return run?
Well, I think if you got a reverse charge service, or if you receive a reverse charge service, and as I don't know what the T codes are on Sage, but if T21 is the one that, assuming T21 is the one that they've allocated for this, if when you post the invoice from your supplier into Sage and you code it to T21, when you run the VAT return, Sage will automatically just pick it up and make the appropriate postings.
There's a T26 one, Simon, for purchases as well, for subcontractors. I posted it on the answer with that I took from Sage's.
Okay, yeah. So presumably, yes, there must be two codes, T one for sales and one for purchases. Engage my brain.
And then we've got another question from another Sage accounting user. It says, we are a contractor to our customer and also utilise subcontractors. Do we account for the reverse charge and not pay the subby, or apply VAT to our customer and account for the VAT on the sale through T21, which is the new Sage code, and also on the cost? Therefore, the effect to us is neutral.
Yes. So if you the sale to the supply to their customer would be reverse charge. So that would just be the value of the sale in box 6 with no output VAT. Then the subcontractor's services to them would be under reverse charge, and so you would have the VAT to account for on the supplier's invoice in box 1, which you recover in box 4. So, yeah, again, as she says, the effect of that chain would be neutral, would be nil. So you'd have an invoice, say, from the subcontractor for, say, £5,000, no VAT. So the entries on the contractor's VAT return would be 1,000 in box 1, 1,000 in box 4. So there'd be no VAT to pay there. That would square off. And then the invoice onwards to their customer would be, say, for £10,000, no VAT to charge. So if they were the only two invoices on the VAT return, you'd have a VAT return which would have box 1 1,000, box 4 1,000, box 5 nil, so nothing to pay. Box 6 £10,000, and box 7 £5,000.
I suppose the only thing, as Mel's commented on the question as well, you would need to check whether your customer's an end user. If they were an end user, then there wouldn't be the reverse charge on the customer side, but you would have it on the subcontractor side. Yeah. So the sort of secondary part of that question: is there a timing issue on the VAT return? I think the question is yes. Yes, there is, depending on whether you're in the reverse charge or not, in terms of what you're being used to and the way it previously applied.
Yes.
Okay, so let's see if there's any more. Yeah, so Alison's added on, T21 can be used for both sales and purchases. T21 is standard rate, T26 is reduced rate.
Right, okay, yeah.
So any other Sage 50 users out there will find that relevant. We've got another one. We carry out joinery work for steel companies who are end users and not CIS registered. Do we charge them VAT and not reverse charge?
Yes.
Also, some of our February invoices are 90 days payment, won't be paid until the beginning of June. Would the reverse charge apply?
No, because the services, the supplying services to end users, so VAT rules apply in the normal way.
I don't see any more questions, but I'll give it a couple of seconds just in case anyone's furiously tapping away trying to get their question in. I think that's it. We've gone slightly over as well. So, yeah, doesn't seem to be any more questions. So, thank you, Simon.
Okay. Lovely. Thank you, everyone, for listening. I hope you found it useful.